You're listening to Southpod, Rise of a Region, hosted by Stanfield Gray and John Yarian.
Greetings and welcome to Southpod. I'm your host, John Yarian, and we are recording from the Dig South Conference. We're here inside the mothership during the event itself, and I am pleased to be joined by Jordan French, president and founder of Notability Partners. Jordan, how you doing?
Fantastic, John. So great to be here. Thanks for having me on.
Yeah, it's good to have you. And I'm curious about a few things. You are a content creator. You are, I think, an awareness builder. You wear a few different hats. Help us understand what all you do, and then we'll break down each piece of it.
Sure. Yeah, I think it helps by explaining kind of who I am and a little bit of a backstory briefly. So I am a little bit of an unusual case in that I'm an engineer, turned attorney, turned entrepreneur, and back-ended my way into journalism. I think despite the optics, it looks despite the optics of that and things seemingly all unrelated.
Jordan, that is profoundly strange, I'm going to be honest. I didn't expect the attorney snuck in there as well.
Yeah. In fact, you're my client if you're an American citizen. Between 2009 and 11, I worked for the Energy Commission in Washington, D.C. as an enforcement attorney. I was in those people versus cases. That's why I say...
Yeah, thank you, by the way, for your work on our behalf. I appreciate that.
I appreciate your sentiment on that note. And shout out to all kind of federal employees, especially military. There's a lot of great work that goes on, and I kind of witnessed a lot of it too. It was a fascinating space, fascinating time. It was post-Enron, a couple of years at that point, post-EPAC 2005, which is kind of like the rules and regs that gave FERC, which is the Energy Commission acronym, teeth. So the staff and enforcement, largely attorneys, analogous to the SEC, it's the Securities and Exchange Commission, the CFTC, the Commodities and Futures Trading Commission, the FTC.
Let's just keep doing acronyms.
Panoply of them.
Just keep
out there. FERC was a little bit of a backwater up until Enron, and staffed up with some really just very aggressive, very capable, high caliber attorneys. I was, of 42, like number 42, the most junior one there. But when you're in that position, you learn a lot. Took a lot of depositions, and we did some really good work.
I don't doubt it, but let's connect the dots, because I think you said engineer.
Yep.
And then there was this phase. And tell us more about what you're doing today.
Yeah, sure. So a lot of time I spend is writing. So I'm on the editorial staff at TheStreet.com, big financial publication. A lot of people associate it with Jim Cramer of Mad Money fame. He was one of the founders. It's been around for about 20 years. Pretty big, 35 million visitors a month. And my beat there is mainly on blockchain, cryptocurrency, the markets, and because of my enforcement background, in part they brought me in to follow around the SEC, which is the Securities and Exchange Commission. That's the main regulatory body that's tasked with enforcing and kind of regulating markets. And there's a lot of controversy right now that I'm unpacking around, well, are these cryptocurrencies products, securities, something in between, and how does the SEC wrestle with that as a flood of money, John, goes into that industry?
Yeah. So you create content, you're a writer in that regard. Are there other things you're involved in? Is there a startup here? Is there something else? Or is it mainly you looking at industries, analyzing them, and helping others find their way through them?
Yeah, I'm largely on the end of reporting and doing some analysis on news. So a lot of what we'll do is not so much surface level of this happened, but kind of try to unpack a bit more of why, who were the other characters involved, and kind of why would that all kind of go down in that way. Some of the recent pieces on everything from some of the fraud situations that have roped in Floyd Money Mayweather. NASDAQ's been very aggressive to deploy. They're all in, as they've told me, on blockchain technology. So there's some surprises there in a countercurrent from the financial industry. Certainly, that's very wary of the technology, and for good reason. There's some real potential for it to displace things. A lot of that's pretty benign. It's kind of like the the dragon that puffs that isn't. Blockchain technology itself has a lot of its own issues. The crypto market, certainly a bubble, kind of the bubble that doesn't matter, as they often are when they're not enormously sizable. But nonetheless, we have a very active SEC coming up shortly, and mainly they're worried about getting caught and blamed for some left or right field blow up out there because there has been so much money that's flooded that market, and frankly, in a lot of ways, irrationally or irresponsibly.
Sure.
Yep.
So at the conference, there's been a lot of conversation about blockchain, which is no surprise. That's what you expect being here. From your position in writing about it and having a responsibility to cover and understand that, and the feedback you get from what you create, how would you describe our sort of general IQ level around that? A lot of us want to drop that term and sound smart, but what's your sense of the relative level of comprehension within the entrepreneur community and the broader business community about blockchain technology?
Yeah, both really early and very low, minimal. So just from kind of a technology standpoint, it reminds me of, there's a few analogies, AI a few times in history as some kind of a panacea that's going to solve all sorts of, currencies that get devalued, or the bankless, and everyone is going to have a solution, and it's blockchain technology that answers every one of our problems. That's not quite the reality at all. What I do predict, just to bring that point home a little bit, is the technology is useful. It's an application. It's a way to transfer, track, and record. There's a lot of value there. That said, it has its own vulnerabilities. Certainly the applications that can rest or layer on it, like digital wallets and so on, which you've seen all sorts of money disappear from, have issues. And then the permission layer, especially at the enterprise level, which is really where I think, and I've seen a lot of that technology is headed, is at the enterprise level is where they're going to benefit most from mostly back-end stuff that consumers never see. Cryptocurrency is really sexy right now. I think it is forming into and is at present an asset class, but just like AI, which I mentioned earlier, it'll just slot in. Blockchain technology will slot in next to AR, VR, AI. Autonomous vehicles were a really big deal a few years ago, and that's kind of fallen in line as its own channel, and it'll be just another cool technology that's out there, but not the dominant media grabbing attention one. I do think, what you brought up, that to your question, what is the level of kind of understanding of the space? I think the whole reason, in part, why there's such dynamism in media and in kind of lay conversation is because there is a lot of uncertainty around it, and everyone wants to act smart. So on my second point, the corollary to that is, you used to, maybe in late 90s, you would hold out, a shingle as like a web evangelist. You'd be in your suit in the 2000s, and a little bit later, you'd be like a social media guru. And now those who want to help all of us in life, coach us through the next big thing, we're all crypto experts. Which really, given the duration that the tech and that form of currency has been around, really no one is an expert. There's really very few.
So what I'm hearing you say basically is, everybody calm down a little bit.
It's
right?
time.
Calm down a little bit.
Yes.
Learn a little bit more. And we're kind of mixing and mingling two things here. I referenced blockchain. We're also talking about cryptocurrency.
Which are two different things.
They are two very different things, and we haven't even bothered to define them. So let's do the audience a quick service.
Sure.
Can you give us a definition for each, and then we'll shift to a crypto conversation for a minute?
Yeah, sure. So it makes more sense to start with the technology itself. And that is called blockchain, and that refers to a digital ledger that can deploy any number of systems that will unlock keys using kind of encryption or unlock puzzles. And that computing power allows for the blockchain, the information or data on that blockchain to be distributed, right? Which forms a protective layer, right? And doesn't allow other computer systems, for example, to overwhelm it. This is a concept around centralization versus decentralization.
Right, and another way to put this would be like trying to pick hundreds of locks all at the same time.
That's right.
The security that comes with the decentralization of the locking or unlocking process is that it creates a mass challenge versus a single point of vulnerability. Is that fair?
Yeah, and there's a lot of great analogies along those lines, and that would be one of them. There's a host of issues with the systems, but generally what sits atop that layer are cryptocurrencies. So what actually happened in this space was the reverse, something called Bitcoin, which a lot of people...
I've never heard of that, Jordan. I have no idea what you're... Oh, no, Bitcoin, yeah.
Have heard of it. It actually kind of started in the reverse. So at first, narrowly, there was
a guy here with a Bitcoin lapel pin. Did you see that?
Yeah, and it's proliferated. It's everyone's talking about this.
Yeah.
And to a comedic level. That said, it kind of started in reverse with the intent from kind of a libertarian community and an approach to have some sort of non-fiat currency, right? If you think about currencies, they're really just a technology. Just like the US dollar is, we could use gold or some other, and possibly something else digital. And the intent was there. Well, in order to do that and have a decentralized currency, you need to build a system that would allow for that, right? And that's why I refer to the distributed ledger that relies on kind of a ever-increasing participation, right? And so the more participation there is, the more, well, certainly decentralized is, but also more difficult it is to pick all those locks, as you said, and overwhelm it. Well, after Bitcoin launched, and starting with the Ethereum network, and then a bunch of other blockchains proliferated, and their purpose was more, well, this doesn't have to just be used for Bitcoin or one kind of currency. It can be for all sorts of applications to secure and store data. And that's why nowadays you see kind of blockchain for healthcare and blockchain for dog walking and blockchain for every species that could be out there.
Yep. So we're talking about the virtualization of currency, or value as represented by currency, and we're talking about the decentralization of security systems. And when I think about that, I think that those are really hard to govern. It'd be very, very difficult to consider from a legislative or regulatory perspective on how to manage or constrain these forces. Can you, without going too deep in the weeds, because I know you have a lot of knowledge on the subject, but some of our listeners may be struggling to keep up, help us understand what's coming down the road or not from a regulatory perspective that might influence these interesting topics?
Yeah, definitely. And in some ways, very few know. So and to keep it at a really high level, the cast of characters is mainly the SEC, kind of to merge a few characters, and they're the regulatory body in DC that heretofore largely regulated equity markets. So you would buy stock, in IBM or Google or Alphabet now or what have you, and the trading of that under a few securities acts that they use to enforce permit certain types of transactions, certain sales at certain times. In other words, a set of rules that every marketplace has to abide by. Now, cryptocurrency just kind of crept up out of nowhere with a flood of money, and so there's a new kind of asset class that's quite unregulated, like a new Wild West. And so while there are exchanges, in air quotes, that hold themselves out as exchanges, they're not quite regulated and registered, for example, with the SEC, which is the requirement in equities markets that submit themselves to a certain set of rules. And because a lot of these cryptocurrencies aren't registered, they're not submitted to those rules, and those rules exist to prevent things like fraud.
Now, just to rudely interject, we all know, because we all have the same crazy uncle who told us to buy cryptocurrency at Christmas and whatever the last time you saw him was, and he is representing this Wild West scenario you're describing as an advantage. He's saying, go get some, buy it up, now is the time. Not asking you to make a recommendation or a proclamation on that, but how do you see that kind of inefficiency, right? This idea that there's value or advantage in the chaos you just described. Is that a part of the equation here, and how should people be thinking about it?
Yeah, so there's a few ways to think about markets. Oftentimes, especially if it's in the short run, it's a zero-sum game. In the long run, can potentially be something else. But I think one thing to consider that a lot of people don't is who's selling in the first place. And what a lot of kind of novice investors and those interested in this space don't realize is that this is a liquidity event for some founders and maybe some earlier investors behind a company to unload into the marketplace where a currency that represents something perhaps, but has not necessarily any underlying value. And even though the promises that they might make in, for example, a white paper, and a white paper in these cases is often kind of a prospectus on what the business is, or in some cases will be. And will be is kind of a scary term here, because you don't want to necessarily invest on something that might just be thin air.
Sure.
So there is a lot of risk of total capital impairment, especially for something that, even if you do want to bucket it as a currency, and let's just for now assume away fraud, which we can get to in just a bit. That's something that's static. It's not necessarily paying dividends. It's not a business where you can apply a discounted cash flow analysis or some other analysis you might normally, if you work with a broker or a financial advisor, is going to use to value a company that you might invest in, or a stock you might invest in.
Sure.
So those are two very different species. So it's a very different type of investing that lends itself to a lot of speculation. A second to that is fraud, which we can certainly talk about.
Well, should startups, should growth stage companies consider accepting payment or investment in crypto? I mean, is that just a mistake right now? In your position, would you think, you should stay away from it, it's not mature enough or regulated well enough, or should they get into it?
Not necessarily avoid it. I mean, look,
Make
there are
a
a lot
declarative statement that we can hang you on for all time right now. Just let us, should we do
No, it's certainly, and I'll stick to it. I mean, so back to an earlier point, if you're a founder of a company and you can, have an initial coin offering, which is a play on the IPO, which a lot of people have heard of, which is the initial public offering. It's when a company goes public on the stock market for the first time. The ICO is an analog. It's a bit controversial, though. It's a way of crowdfunding money for their kind of blockchain project, typically. The intent is usually to raise money and or support the particular project, and not necessarily to kind of change the world out of goodwill. So that already presents itself a number of problems for founders in how that's marketed, because if it is a security, it's required that it registers with the SEC, or you can only solicit to accredited investors. Accredited investors are just a class of people who have, frankly, a lot of money, over $1 million, or they make $200K a year. The main point is that's a pretty small market. And so there's a lot of, if you want to kind of get out of the weeds, a lot of legal thorny issues that as a startup you want to take care of first. Otherwise, the SEC is going to be breathing down your neck and going to eat your lunch, and you'll have a lot more problems than potential opportunities.
Yeah.
If you do navigate that and you have a business that lends itself well to using blockchain technology, and it makes sense to tokenize something, for example, data that an app might have, there's a lot of utility there. Some of these things make sense. I do see kind of a gold rush move because it's so much easier to raise capital through the ICO than through traditional means. That's disconcerting, and it means that, any number of things, but mostly that it's a bit too easy of money to have that asymmetry between traditional means and the ICO. The SEC certainly is looking at this too, and that's where you see some red flags. So as founders, there's a lot of opportunity. But you really want to think long and hard of this question: are you chasing a fad, or are you really in the industry for the long haul, and this technology makes sense for you?
Yeah, well said. Jordan French, anything you want to plug? TheStreet.com, where you can read and learn more.
Check out The Street. Check out my column. We do a lot more in-depth coverage than most of the financial outfits out there. Pretty active on the circuit, and a lot of coverage. If you are interested in blockchain technology and cryptocurrency, it's TheStreet.com. Pretty simple and easy to get to. Come check us out. Obviously, the whole rest of it is a lot of equity market coverage. Do a lot of top-notch work there, and a lot of people know some of the household names that are involved in the publication. Yeah,
Jordan, thanks for joining us.
Yeah, appreciate that. Thanks.
Thank you for listening to Southpod, Rise of a Region, where innovators dish on success, failure, and a rapidly evolving South.